Okay, so now I'll be explaining how I traded XAUUSD on Friday, and this is the breakdown of what I saw on the chart before I hopped into trading. So prior to earlier this week, around Monday, which is this area, there was actually nothing going on. I couldn't get a trading zone on the big up time frame and all of that. But on Tuesday, I came up to the chart, the market was around this area. So I think this was all market did on Tuesday. So let me explain this area for you guys. All right. So I came up to the chart, I saw market broke structure to the upside, broke an internal structure too. Market broke structure again to the downside, broke another long structure again to the downside. So I know my trading range is from this point to this point, because I was not getting any range on the higher time frame. Okay, let me clear this side. Okay, let's explain. So market transferred money from these guys to this guy, then to this guy to the upside. So there was a flow of money to the upside, but all of a sudden we had volume breaking down two structures, and when we have the breakdown of two structures, that indicates a change in the direction of what market was doing earlier prior to the break of two structures. All right, so when I noticed this stuff, I was like, okay, now break structure to the upside, this would have been a valid demand for some people to trade this area, because it was a successful money transfer from here to here to here. Right, so 3 flow of money transfer, so people would want to get in and scalp the trades and whatever. So people were stopped out on this area. You can see market broke structure to this side, and what happened? Market retraced and stopped at this point. So retracing to that point, I already see, okay, this pullback was not a complete pullback. What do I mean by a complete pullback? Like pullback up to 50% of the trading range. So I draw my fib down to this point where we had the first retracement. We saw that this was not up to the 0.5% or 50% of the Fibonacci, but others, there's a reason why I use this place, but it's going to be complex, because if you're a beginner, I would not want you to use this, because it's not a good and valid break of structure to the downside. It's a valid one though, but I will have to explain. I'm sorry guys, this is the first video I'm making, and I'm not really too much of a teacher, but I'm definitely going to improve. But there are other certain things I'm going to explain. Okay, this is valid, but some from beginners, they say because it broke with a week, they're not going to take it as a valid. But why I took it as a valid is, one, because it broke a money transfer. Sorry guys for this. You see this money transfer, a sweep, an internal sweep, then the break of structure. This money transfer was violated where areas people wanted to buy from, but what's it called? It retraced now up to 50% level. So I drew further my fib to this guy, this other guy, and saw still that this guy wasn't up to the 50% the level of the Fibonacci. But there's a concept I use in trading there. So when I see that an incomplete pullback, not up to 50% of range, mitigated a supply or a demand, that just makes both the incomplete pullback and the area of mitigation my liquidity. So what do I mean? Some people would want to mark this place as their liquidity, which they are not wrong to the level of trading, but I tend to mark this guy, my level of liquidity. Why? Because this was an incomplete pullback, but mitigated this area and sold to the downside. So I have more prior zone, more wider range. So I'll have to adjust this range to this area. So now, because I know now that, let me take this Fibonacci out, because I know now that what's it called, market is below the liquidity. I'm looking for market and waiting for market to take out. I would look for buys to take out those liquidity, just so we're there in the now moment. But you could wait. But I mean, it's skeptical to sell when gold is bullish. You understand what I mean? So definitely this structure is a set structure, because when they take out the liquidity, we're expecting price to get to some certain supply and what, break, right? We understand that. But I mean, it's scary because it's an all-time high. There's no bigger structure, no PAX zone and whatever. So I got this trade, this vision, this story, this logic on Tuesday, and I was waiting patiently. So prior to extending this liquidity further to the future, so this was Wednesday, I didn't come on the chart, I didn't have any opportunity. But I mean, if I'd be on the chart, definitely I would look for, I would definitely see an opportunity to sell from areas like, I think areas like this, I will get them from this trade, areas like this. I know many people will say I'm spotting on side, but I have my reason why I will get out of this trade. Probably if I had a stop loss on this trade, I would be kicked out. But if not, I would still be on the trade and scalp a little to this area as well. But I wasn't on the chart. That's not what I'm going to explain. My area of concentration is on Friday. Okay, now because I know we bought on this area, buyers were right, wanting to see the liquidity taken out. The first set of people that marked out their liquidity took their liquidity out. So many people sold from this area. Sellers were here again, buyers came, and in all of this trade, definitely a lot of stop hunt has going to be taken out. Yes, a lot of stop loss is going to be taken out. A lot of stop hunt will be played in this area. So I came prior to Friday. I was like, oh, because I know that my overall liquidity is this guy from my trading experience, I extended it to the future. I was like, oh, market is still trading in what? Below the inducement, below the liquidity, below the incomplete pullback. So I was still expecting price to come and take out this liquidity before I would see a very clean setup on this area. And I can explain why I marked that area as my supply. Well, if you want me to explain, but first, this is my first video that I'll be putting on my YouTube. This is the first time starting on YouTube, making free content explaining how I trade to those that would understand the concept and stuff. I will try as much as possible on other videos to make simpler concepts, to make simpler things for beginner traders and also those that are not beginners. So I came to the chart on Friday. So coming on Friday, I saw, okay, we sold from this place. You know, I said if I would be on the chart, I would have sold from this, or I would have sold from this place. So people sold from this place, market came back, though it's tough. A lot of people will still be holding on to this trade, but market printed something I loved. Market printed a violation block, indicating violating these old guys areas, these whole people still wanting to hold sell trade. So market violated them, and the area of violation is around this area. So what did market do? The market came back, tapped into the demand and rallied up. Oh, I saw, okay, now we've tapped into demand, we rallied up. Let me do it again, please. I'm sorry guys, just bear with me. I mean, the first time is not, it doesn't have to always be perfect, so bear with me. So I saw and I came to the market around this place. Yes, around this area, there was really nothing for me to see. I was around this place, I saw market did a retracement, went up and all of that and all of that. But yes, market too got these guys, same story, incomplete pullback. Market took demand and rallied up, but market still hasn't gotten to my level of inducement. So I went down to the 5 minutes time frame. Still I had nothing clear to see. It wasn't clear because I was prior from this point to this side hasn't played out already. I was around this area, so I had to scale down to the 1 minute time frame. I had to scale down to the 1 minute time frame. Can I call you back? I'll call you back. So I had to scale down to the 1 minute time frame. 1 minute was very interesting for me. So what did I see on the 1 minute time frame? Okay, because I know my overall target is this guy, which is my liquidity area prior to Tuesday. So I saw something here, and what did I see? So market broke structure to the upside. Market broke structure to the upside, then market broke structure to the downside, still on this area. The market did its incomplete pullback, making here what an inducement for some people. And for me, if I were to be a seller on this trade, I thought as the sellers, because I know definitely market is going to buy ticket of liquidity. So sellers have already seen a structure, a good clean structure on the 1 minute time frame, and they will want to sell from what? The breaker block, which is this area. Quite alright. But market came to this place, print against something interesting to me, which is my violation block. Market printed the violation block again on this area. So I extended my violation block to the future because I said, okay, these are people where people would want to sell. They got stopped out, and after the violation block, the same story. I had my incomplete pullback after the violation block, and earlier on the trade, I was waiting for market around here. Yes, I won't lie, I was waiting for market around here, but you know what? I took loss and stopped profits. So I was waiting for market to buy up to this place. But I mean, I was wrong in my timing. I didn't actually really get to focus on my timing when I came to the chart to do all of this 1 minute old detailing and stuff. So I had my first order around here. I was risking 50% of my account. It's a small account actually, but I eventually got stopped. So what happened? There was a manipulation here to the upside, and I was another manipulation to the downside. At first, I was waiting for market here because when market took out this, what's it called? This liquidity, it was a structure on its own to the upside. The market pulled back. It was an incomplete pullback, making here what? An inducement. I was like, oh, since a violation block was created, I mean, market will want to make use of this one first, if not to this level, but I mean, to this level first before we have a retracement or a little bit above this level, creating a new high before the downside. But market, no, it didn't do that. Let me delete this. Sorry guys, let me delete this. So market didn't do that. I had to stop here, but immediately I had to stop here. So this was out. I was stopped out from the trade. I was like, why? This is supposed to be a valid demand for buyers that are right to take out this liquidity. But eventually, market did this thing. But before doing it again, I had another block that was violated. You know, there are reasons why I choose these blocks actually. So my area of violation block was this guy, which is a perfect violation block for me. So I had to pull my supply here. A market printed cute thing for me, an incomplete pullback. I saw a manipulation and inducement and what I call my entry. So I was risking 50% of the smart account, but I had to change it to risk everything that was left in smart account to recover. Now I have my whole direction noted. I mean, there was a manipulation here, okay, so okay, definitely it was the zone I was waiting for, but I was, because of this violation, but I had to make use of this. So market did this thing, tapped me in, boom, went straight, took out this liquidity just the way I'm waiting for market to take out this higher liquidity to the downside, hit TP to the supply, to my demand. Why did I make this area my demand? Okay, Many people would want to buy from here. Many people want to buy from here. But I mean, you're not wrong, because definitely we all know they taught us to say the closest guy to your inducement is your guy. But I have a reason why I didn't buy here, which I would not want to disclose that easy, because some of my guys are gonna be angry with me. Some of the guys that are in the inner circle that I'm teaching, they're gonna say, why am I giving things for free? I mean, they paid for it, and blah 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 blah. But I have my reason why, because I had my fair value gap below this area. So I mean, I can still tell you, but it's not really too much detail into it. So I had my TP on this area. Market came, boom, tap into my demand with little or no drawdown, covering this what's it called, this protected point. Well, this protected point, because it's already tapped into this block from the 15 minutes time frame. So this protected point, and I took the trade. Taking the trade, I saw something. Market did the same thing. Market broke structure to the upside, did a little retracement, continued, that's broke two structures to to the upside and the 1 minute time frame. So now the same reason why these people will mark here as an incomplete pullback and they will want to buy from this place is the same reason, the same way people mark here as an incomplete pullback want to buy from this place, because it's closest to the POI, closest to your inducement. This was recreated here, an incomplete pullback, the closest POI to your, what's it called, to your inducement. But me, I knew that, okay, this guy still is printing what I'm used to, and I was like, oh, since I really do not know where to place my order and stuff, blah blah blah. Sorry guys, sorry. I had to just pull my future penny order just at the inducement to be taken out. And I feel I'll get stopped out of this trade though, but okay, let's see how it goes. Because I have to like increase my stop loss a little bit. I mean, it's a new week, it's Monday, market can do its stuff. So I had this one, incomplete pullback. Then what did I target? Just a little bit above the area that started this whole retracement to my demand. And boom, we got our trade. So we had a loss here. We had our first loss here. The market gave us a point to reclaim our direction, reclaim a higher risk to give us for our loss and a very good reward to this place. And eventually I made use of the floating profit on this demand to ride to this place. So on Friday I had 1:4 and 1:7. That's like almost one. We had the point and all is almost 1:12 on Friday. So market came, boom, went, gave buyers early buy setup, but I know, okay, market definitely will come to take this out. Market came, boom, eventually tapped me in. So I wasn't risking too much on this trade. Trust me, I didn't do this, I did here. What I did here was use my floating profits to get into this demand prior to the upside. But here I actually was conserved a lot to take out some money made from the table, and I had to enter lesser than what I did on this move. So yes, I'm still anticipating. So because what's the idea, what's the logic behind this trade? So because I know that there's still liquidity that needs to be taken out, I had to trade against the liquidity side. I used to buy to the liquidity side. And since I'm looking to buy to the liquidity side, you might ask, so why did I sell? Definitely when you are in a trade, in a direction, always tend to like trade against yourself. When you trade against yourself, you see area, threat zones that will cause a crazy retracement, that want to make you panic and stuff to bail out from the trade. Okay, so that was everything I did on Friday, and alright, I hope you liked this video. I hope it was helpful, and I hope you subscribe to the video. Like, subscribe, and comment is the only way that will keep me going. It's the only way that will give me the boost, the courage to keep dropping educational content on how I trade, and also answer to some questions on the comment sections, things you are finding difficult in understanding. You could just chat them on the comment section, and I will look into it and drop a video about it. Thank you.